Time now for another check of the Dow this morning. Investors are reacting to the resuming of strikes in the Middle East and rising oil prices. Right now, the Dow is down about 700 points. Let's bring in CBS News contributor J.D. Durkin, who is joining us from the floor of the New York Stock Exchange. So, J.D., let's first talk about Fed Day. The Fed is meeting today, but it's not clear exactly whether they will hold interest rates steady or hike them up. Why is that?
Exactly right. I think overall, most market participants, Vlad, probably expecting rates to stay the same, but there has been a lot of confusing kind of mixed data with regards to the state of inflation. We did have a few softer than expected inflation prints recently, but overall, we are contending with a stubbornly high inflation environment, and that makes a really difficult task for the road ahead for Kevin Warsh. Today is set to be only his second Fed meeting. And Warsh really may want to prove ultimately that he is the independent leader, separate from political pressure from the Trump administration, that he touts himself to be. And I think there's some recent history to look at. You go back to Ben Bernanke's first meeting in 2006. He raised interest rates. Alan Greenspan's second meeting in 1987, he raised interest rates. Same for Jerome Powell at his first meeting in 2018. And in this environment, rising inflation is a concern. Overall, Vlad, we're still looking for clues about what a Kevin Warsh Fed will look like. He's announced a number of these task forces aimed specifically at overhauling things like the Fed communication, how it approaches jobs and productivity. We know he's also specifically skeptical of what's called forward guidance. In other words, telegraphing what the Fed may do later on this year with interest rates or even next year. But we can't forget at the end of the day, the chairman's incredibly important, but there are 12 different economists on the FOMC. The C in FOMC stands for committee, not chairman, and they have mixed views about what to do with interest rates. Of course, we get the decision at 2 o'clock Eastern today, and we get Kevin Warsh's second press conference as the new Fed chairman at 2:30.
Breaking down the acronym, JD, I like it. There is no I in team. So we're, of course, seeing oil whiplash. Oil prices are up, then they were down, now they're back up. Is this the new normal? What can Americans, how can we prepare ourselves for what's to come in terms of oil prices?
That's a great question. I think it's the new normal so long as the conflict in Iran is proving to be a fair bit more protracted than the White House had anticipated, than the American people had anticipated, and here on Wall Street that market participants had expected. We had a big spike, of course, in oil prices after the conflict in the Middle East started at the very end of February. You go back, you look at the data from April and May, we saw it peak well above $100 a barrel. Then we had a kind of a nice pull down earlier in the summer, which did not last long. And we're kind of whipsawing day by day. Even today, we come in with a threat of new attacks against Iran. And we're seeing oil so far in the last few minutes move up about 5 or 6%. And that translates, pretty indirectly to prices at the pump. As of this morning, the national average for a gallon of gasoline is about $4.09. That is up from about $3.13 this week last year. 97 days to go until the midterm elections, and it's a major political pressure point, I would argue, for Republicans in the White House in particular, trying to run on a message of affordability, which is a lot more difficult as we kind of see this whipsaw effect with oil.
All right, J.D. Durkin breaking it down for us. J.D., thank you very much.
Thank you.